Welcome to TradeTheNBI.com. This is John. This report is for the 13th Friday of October. So, spooky time as we get close to Halloween and you get that kind of situation. But um, it was interesting. Things were moving along fairly decent on the road to, continuation. But as we got close to that 50%, results from the 30-year Treasury auction and that started coming through, and they were not pretty. And as a result of that, there's that MBI white spike that we were talking about, and the fade off of the magenta beginning. Still elevated enough and above yellow that shouldn't be too significant. We had a series of positive extremes on our shorter time frame that needed to be filled back in from the previous run up, and they got filled in quite nicely. As you can see, the move up of DOC Orange as the fade off short-term buyers was pretty clean here from the steel dipping. Right now, we're looking at a potential for the DOC Orange dropping. That would be helpful to bulls along the set. But we talked about this from a shakeout standpoint. When you get move back up towards that zero, you really need to maintain it. Otherwise, things start to get loose really fast. And it's kind of what we saw pretty quick as that faded off. I mean, they recovered pretty much after the positive extremes were filled and popped right back up. And now at the declining 38% level here on the Morganacci, and with dropping lows, that does pull price towards that 50%, but that's a declining 50%. So it changes things significantly. And it's interesting that we're still hanging around that algo. And of course, we've never filled the full algo on the NQ. So that is a potential drawdown potential for the NQ should that grow out of favor, because NASDAQ has been really the pump throughout most of this. And if that starts to ease, it's going to have an exacerbated effect on the ES broader market in general. And be interesting to see with that auction situation as we look at TLT and the yields rising back up again, whether or not that creates some degree of a liquidity issue with the amount of dealer supply, and how does the U.S. finance its massive deficits in that. Still with no Speaker of the House, so there's a lot of chaos potential in there. And will the Fed have to step in and start providing additional liquidity, which is exactly what the market is hoping for, because that would be a big boon. So that would be the counter trade if we start to see the Fed jumping in with significant liquidity, because that would be the baseline for support for the market, and certainly attract a lot of buyers in that particular case. From an oil standpoint, a modest increase. There was large crude actually buildup, and by not having a significant drawdown, you got a lot of supply. Prices have eased, so demand is obviously increased, and production is at pretty close to record. So if you see output cuts in that, it's going to be again an acceleration, and also that unknown factor of should things begin to escalate in Israel with either Syria, Iraq, Iran. Um, a lot of different elements in that one, and that certainly creates a lot of jitters and potential for difficulty. Now, should everything turn out smooth, and I think you've got a pretty clear opportunity for a nice pullback in oil, which is only going to be limited in the aspect of how much is available, but it would be helpful, at least from easing price pressures, which we saw consumer prices still rising way ahead of Fed expectations, as well as everyone. We knew that was going to happen just from the oil increase. It was no shock with any of that. When we look at the euro, obviously it becomes problematic for the euro whenever there's a drain in the need for anyone to be in eurozone, particularly when you can still get so much better yield from U.S. security treasury situation, and that's going to continue to be pressure on the euro. And it's a tough spot. They keep needing to get it back over that 106 range, and every time they get close to it, they hit that ceiling, and it sort of reverberates back. And that's like I said, it's going to be a tough one for the euro. Now you get oil spike above 100, and you're looking at sub parity for the euro very quickly, because the demands for them for oil and that are just dramatic. From a gold standpoint, continued to push higher early on here. It faded off a little bit as the market recovered, but we know this is way overdone from a selling standpoint, and the question was only how long can they keep it. And of course, when you break a low like this, it's usually the pull right to come back up to it. The fact that it's been this slow in returning to it shows the extent of the pressure. Bitcoin held up fairly decent on the pullback. We noticed that Bitcoin had been doing much better than ETH. Still, both are within sell signal, but ETH broke into a new low, which is something I talked about would happen in any broader selling, and that's exactly what took place when we look at it from the 50K. So this is what we were talking about from a positive extreme, and I had mentioned these the other day. We had this set up from right here in the last series of positive extremes. We also had this brief series that filled back pretty quickly from the high point. And then the most dramatic return would be all the way down to the 43.38. So if there's any continued selling, I should just draw the line on there. I put it on for everyone's benefit for before, but that would be a significant target point, and certainly create some fear within the market. You can see in the post market right now, things are looking positive as it is. When we go back to earlier in the day, you can see what happened. We were doing okay. Pre-market started off pretty weak and soft, and then by the time we got middle of the open, optimism was building, and then as the results from that treasury auction came through, it was just run. Run, and that was the easiest way to describe it. But it built up some support at the end of the day, got back up to that 50%, and then hovered around there. And here in the post market, they're taking advantage of softer liquidity. There's been some back and forth, but as we get closer towards the U.S. pre-market open, I think things will improve. So that's the long and the short of it for now. It's going to be an interesting Friday the 13th, and I think the effects of typical October and a lot of the jitters about where things go are really starting to add up, particularly given the gravity of the situation from a global world situation, and that's certainly going to have its impact, not to mention basic economic situations that are developing from the higher inflation. So all those things in consideration, we have the potentials for some short covered bursts. However, it's really just going to depend on global situations at this particular stage. As always, though, trade well. Look for me on Skype chat. Have a good one.